recording this. This will be available with the other two that we had yesterday, the morning and the afternoon slots. Today is a little bit more detail, or just kind of going over not the broad overview of what the Fed is, but what to expect from this meeting and this statement in 30 minutes. First things first, not to take anything for granted, at 1 o'clock on the dot Central Time is when they release their statement. If they're going to cut, and then what their prepared remarks are going to be, and that hits the wire exactly at 1. At 1:30, there's a press conference with the chairman, Powell. And it'll be interesting if he's asked any questions about the Trump administration and how they kind of, were putting the screws to him. And there were reports they were questioning, or what was the legality of removing him. So it'll be interesting to see if he answers any of those questions. I don't know if I'm going to run the webinar through the press conference, but definitely for the first half hour from 1 to 1:30 after the statement. Now, a couple things. What's in the market? First of all, over the last couple weeks, Powell talked. He created a dovish tone, which rallied the S&P market, put us over these 2900s. We also had some tailwinds and some strength in stocks with the Trump phone call to President Xi that they're back negotiating the U.S.-China trade deal, which helped markets rally. But the dovish tone a couple weeks ago, if you look back, it was on a Monday when Powell gave some remarks. He gave the market what they wanted, and that was the probability of a rate cut in 2019. So there's only still a 24% chance that they're going to do something today, which are odds on they're not. That's going to be a surprise. So if there's a cut, what's the surprise? That, because there's only a 24% chance that they're going to cut today. And then a 65%, which I would imagine would go up for the July meeting. July 31st is the next meeting. So the key isn't going to be the rate move, because they're not going to move it, most likely, but that would be a surprise, right? That's the definition of a surprise. Nobody was expecting it. So a rate cut would be a surprise. And I think stocks would rally, but I'd be very careful that people don't start looking around because it was a surprise cut and say, what do they know? And maybe we start breaking. So it could be a whipsaw, and I'd want you to be careful. But I really feel the knee-jerk reaction in both stocks and bonds would be up to a cut, because it's just not expected. And I covered yesterday why stocks and why bonds rally, and why the dollar would do what? Dollar would go straight down, euro would go straight up versus it, because of the native currency following the direction of rates. So let's just say they do not have a movement on rates, which is expected. What's then the surprise? The surprise would be the market not getting what it wants. It's already priced in, the fact that they probably could cut in July and maybe another time in 2019. Remember, the stock market's like a spoiled kid, all right? And the stock market's like a spoiled brat, and it cries and cries and cries until it gets what it wants. And so in this case, it's rate cuts. The stock market has been spoiled with rate cuts since the financial crisis. Essentially zero free cheap money for the longest time. Even now, it's 2.5%, relatively cheap, and so it's used to it, and it wants more cheap money. And so that's how markets react. They go up when the rates are reduced. Bond prices, like I talked about, are opposite the rate. If the rate goes down, bond prices go up. So in this environment, when we got central bank action, inaction, rhetoric, movement, bonds and stocks move together, not opposite. So sometimes you get both of them to spike really hard, let's just say, and you're looking to sell it or fade it. You get the bonds to come off first, and then that signals the high. You'll hear my commentary if that happens. You'll see the S&P or the stock indexes then follow the bonds down, because maybe they're both excited about a dovish statement, and then they read into it and say, it's not that dovish, it's kind of hawkish. Bonds go first, stocks go second. So there is a positive correlation, same direction, stocks and bonds. Make sure you're clear on that. Dollar go same direction of rates, dovish. U.S. dollar will go down, hawkish. U.S. dollar go up. If you don't have a U.S. dollar index to watch, the DX, you could watch the 6E, the futures from the CME, because that's directly versus the dollar. So you're going to just be opposite. If the euro spikes, it means the dollar's weak in that 6E contract. Gold, keep an eye on gold if you like, especially if you trade it. dollar gets weak, people go into gold. So it's an opposite correlation to what the US dollar is doing as a currency, and always generally has been that way. Here's one thing I want to say before I get into anything else. Write down, remember, or both, where the market is, especially when you're trading, right at 1 o'clock before the statement's released. Not after the spike, not after the break, right when the market hits 1 o'clock. So if 1 o'clock was right now, 21.5 would be what you write down. Kind of an area, not have to be exact, it's going to get thin, but that's ground zero. That's where the market was right before we got this new information. And this is something you guys should do for any kind of announcement, whether it's scheduled or unscheduled. Whether it's a big Trump tweet that rallied the market, you should know where the market was before we got this new information. I call it ground zero. Why? Because if we rally a whole bunch from 21.5, and that's where we start, and then we break a whole bunch and get through 21.5, that's bearish to me. It couldn't hold the rally from where it started, and it's supposed to. It's one of those things. So you could keep an eye on stocks and bonds and where they were right before the 1 o'clock statement hits. Not after, right on it, and you don't have to be perfect. Just a few tick area of where the damn thing is right before the report came out. Can you go ahead and look at it at 1 o'clock where it is after the fact? Of course, but you want to be able to see it in real time because things will get moving kind of quick. Now, give me 1 second. I'll be right back in a few minutes. If you got any questions, pop them in the chat in the meantime. So I'm not predicting it's going to rally and then break. I'm not predicting of anything could happen as far as price movement. Question that I'm being asked. I'm thinking, what are the surprises, and let me anticipate that surprise so it's not a surprise to me or to us. So I'm thinking there's a chance that this report doesn't give the markets what they want, as far as the dovishness. So we could break at some point. Maybe they pop and then sell them off, but I'll let that happen. The additional stuff that I look at, it talks about in this preview that this is one of the more uncertain Fed statements in a while, in years. The baseline expectation I'm reading, this is Trade the News, is the source. The baseline expectation is that the Fed will give assurances that it's getting more dovish about the policy. That's what the markets want. All right. And it's prepared to cut rates in order to sustain the economic expansion amid uncertainties over growth and trade. That's what the market wants and what's priced in. All right. It goes on to say that would probably satisfy most market participants who now forecast 3 25 basis point cuts before the end of the year. Now, here's another thing that's important within the statement, these buzzwords or phrases that Trade the News points out. Monitoring data, which would be dovish, that they're interested in making sure or on cue to cut rates if the data shows it. Any kind of word like concern is the word that they use about the global environment of weak inflation, trade disputes, all of that uncertainty, and the word used would again be dovish, that they're ready to cut. The other phrase that they use is, will they remove patient in evaluating the need for any further adjustments? If they remove that language, the market will like it, or that's what the market wants. When I say wants, means go up or create the dovishness. If they leave patience in evaluating the need for any further adjustments, that's hawkish. That's the thing that would make this market pretty weak, pretty quick. The stocks and bonds, that is. You can't, because you're following it. So it's a good question here. How do you know, how do you tell the information is priced in? Well, because as you follow, if you're following the Fed the way traders do, the way I do, the way I've been trained to do it, you see a big rally we had 2 weeks ago, almost 200 points. Why? Because Powell came in and said on that particular day he backed up the dovishness and that the Fed could cut and open that door, and we rallied in stocks, right? That's why it's priced in. If he didn't say that, those comments weren't said 2 weeks ago, and we didn't have an expectation for a dovish statement, well, we wouldn't be up this high. So it's what the markets do, and you could pin it to certain pivotal moments, pivotal fundamentals that happen. There's no coincidence to that. When you have a rally and you sustain it, Rob, it validates that that's why we rallied. So the recent early month pop that we've had in equities is due to what? The Fed kind of transitioning from being on hold in 2019 to the likelihood they're going to cut in 2019. That wasn't the case 4, 5, 6 weeks ago. And it's helped the market, give the market some footing. Now, the rationale for doing that has been the uncertainty of this trade war. And at the time, the breakdown in negotiations between U.S. and China. And so the Fed stepped up, in many people's opinion, and said they're ready to cut. Because you got to remember, with this trade war, there's not a lot of precedent in recent modern history as to what the effects could be. There's too many variables, who it's going to hurt more. It's going to hurt both sides. In my 20 years of trading, there was never a trade war, even mention of it. So this is new to the markets and investors and everything else. They don't like the uncertainty. We go down, but we rallied the last few weeks because of this dovish stance that's been new from the Fed. Hopefully that makes sense. Not for this. So this is another good question from Joe. Know your numbers and trade them. Fundamentals blast through support resistance a lot of times, unless it's support resistance, Joe, that's laid out after the event. So I'm less likely to trade resistance because I got resistance up there. I'm more likely to fade and sell the market, whether it's at resistance or not, if a leader tells me to, right? So guys I've done this for just edge guys in the past, and it becomes one of those things that you follow the leader. In real volatile markets, follow the leader becomes the even more important. Relationships become more important. the more volatile. So we're just outside 10 minutes from this release. You're going to hear it on Trade the News, where I'm going to share I don't want too much going through this PC because I'm doing the screen share. I'm doing Trade the News coming in. I don't want to lock up. But I'm going to share the computer sound. So what you're going to hear.
This is a 24-hour live broadcast.
The live test. When he squawks anything, you're going to hear it right at 1 o'clock. They'll do, 1 minute, 10 seconds and things like that. So we'll we're going to move a little bit before or after the number. We're going to thin out before the number. This is the screen typically I also show during the trading room. NASDAQ in the center, oil in the right, heat map of the S&P, footprint of the S&P, and a 4-point figure of the S&P with edge zones. It's kind of difficult, Sam. So we'll keep an eye on where the hell we are right before the release. Even though we are on our lows on the day session, the S&Ps, we are up quite a bit in the last month and a half.
The 10-year note future of 127.08 is 3 ticks off the session's lows and about 10 ticks off session highs seen in the overnight trading session. The U.S. 10-year yield at 2.085%, the 2-year at 1.878%, the 2 10-year spread sitting just below 21 basis points. Gold futures are at 1349.20, and that's down about 0.1%. And the recent high we saw back on the 14th, high for the year was at 1362.20. WTI crude futures are trading 53.87, down about 0.5%. In equity markets in the lower end of the daily range, down just shy of 0.25%. The S&P minis at 29.20. The Dow down 13, the S&P down 2, and the NASDAQ composite down 12. The dollar index is down just shy of 0.25% heading into the FOMC statement, 97.41.
You guys hear him as he comes through the
against the British pound.
computer?
Cable up about 0.6% or 75 pips. The euro up 22 pips at 112.15.
You got the euro at 133.40 or 134.40. Bond market 154.15. Everything's in the SEP. Yeah, everything's going to get real thin. If you guys trade the micro, be careful. It's going to thin out and be a little whippy. This is the first Fed statement. Fuck. Oh, sorry. I thought I was on mute. I always swear when I'm on mute before I unmute it.
Italy reportedly coalition and drafting a bill to reform central banks management. In Italy, coalition drafting a bill that would reform central banks
but
management.
I wasn't on mute. So the what was I going to say, Mark? You get me confused with your
Italian coalition bill says any future modifications to bank statute must be
there's a slight delay,
decided
Paul,
by
because
Parliament.
you guys get a little bit of a delay with the sound, but it's not.
Central bank's board would all be proposed by the government and Parliament instead of internally.
Oh, but the micros, yeah, thanks, Ray. The micros is the first time they're trading the micros. I think the first Fed statement the micros would have traded through. So you're probably going to get a real thin micro market. Just be careful. Other than that, I'm a huge fan of the micro for guys that are newer and instead of sim trading, it's a cheap. I think it's a gift from God, really. Not to get too religious, I think that that's a great market for newer traders. Great answer about the futures exchange, the CME to Forex. But in really thin, volatile markets, until it gains a little bit more liquidity, it's going to get thin. Hey, the E-minis were real thin when they introduced it in 1997, right on top of the floor. And see how thick that they've gotten over the years. So we're about 7 minutes away. What's the time, Paul? How much difference?
Two half.
Like I said, you guys got to keep an eye on.
Two half.
And then there's surprises that maybe we don't know is a surprise, but we're able to anticipate it pretty quick. But write down or remember where we're at in some of these markets right before the release.
Too even.
I think that has to do with the screen share. You guys might get it second or two because of the screen being shared. Hey, listen, there's a shift I did with data, and it's kind of my fault if I freeze up or lock up. I don't think I should or will, but I should have waited. You could also hear the bid ask. If you hear a female and male voice, it sounds robotic. Don't let that scare you. That's edge zone selling or buying that's coming in pretty much on this chart down in here. So when aggressive buying or selling comes in, female selling, male is buying. We're going to get a splattering of, they're just going to, you're going to see the charts just skip around most likely. Keep centering your screens. We're still 5 minutes out. Yeah. The E-mini will look like the micro, and the micro will look like RBOB gas.
Even 3/4.
So you guys know I'm not here to tell you guys when to buy it, when to sell it. I'm not going to say sell it now, guys. Get short, get long. So if that's your expectation, you won't be happy. I'm just trying to give you some real-time direction. I'm thinking out loud is what I'm doing.
2.5 minutes to the FOMC
2.5
policy
minutes.
statement. Expected to keep rates on hold between 2.25% and 2.5%. IOER expected to remain at 2.35%. Expected to get substantially more dovish today, and that could be reflected in the dot plot as well, as the market still looking for 3 rate cuts this year. Outlying calls suggesting that the Fed could make a surprise cut today. Most expectations are for rates to remain on hold, with expectations created for future rate cuts in July or beyond.
Right at the top, I'm going to have him talk and then just interrupt him if I see fit. So where we're at before this number is around 20 even. You see how thin it's getting. I put a bond dome or chart up close to your
Even half.
S&Ps.
1 minute to the Fed rate decision.
1 minute. $22. Bonds at 19.20.
Fed policy statement in just a few
Here
seconds.
we go. 10 seconds. I'll let him talk. Big buy order come in right at 22.50. 17.18. It's bullish.
Fed keeps rates on hold as expected. Keep rates on hold. IOER unchanged at 2.35%. Moving patient from the statement as
They
expected.
removed patience
Bullard
as
dissents.
expected.
Bullard
Bonds are
dissents. The
strong.
vote was 9-1 with Bullard dissenting.
Oh, man. 18 even.
Bullard saying he
Missed
wanted a rate cut.
Bonds just popped, and it got the S&Ps really
Fed
cheap.
saying they will act as appropriate to sustain the
They
economic
got the bonds
expansion with a
really
strong
cheap
labor
at like
market and
18, and they
inflation
spiked
near
them to
target.
05. They didn't make higher highs. Now watch this. We're right back to where we started. Went up, went down.
Update Fed
Big order
seeing
flashed
economic
in.
growth slightly
Bonds went
stronger
from
in
18,
2020,
splashed to
jobless
05,
rate
back to
and
20, now
inflation
to
seen slightly
05,
lower
back to 23.
compared to the March
The only tell was
projections.
that rally off the lows that
As
made it
expected, the
15
Fed
quarter.
dropping the word patient from the statement,
They removed
and they're saying they
patience,
will
which
act
was
as
expected.
appropriate to sustain economic expansion.
Inflation, noting market-based inflation
I'm watching these
compensation
bonds. They
measures have
haven't really made a
declined.
move. Like they haven't
Fed
committed.
will act as
Big
appropriate
order,
to
it keeps coming in
sustain
and
the
being
economic
pulled.
expansion, the strong labor market and inflation
Bonds
near
really haven't made
target.
it. 18 to 05 back to 23. So they're right in the middle of their range from the statement, 1805 to 2223. And we're essentially right where we were before the statement. So they're all looking at each other, waiting for a move. What the hell was that led? The DAX? Right now, the ES is rallying. The bonds are not with them.
9 3/4.
The bonds are not with them. Be careful.
Modest move
Getting
lower in
long.
interest
Bonds
rates.
didn't
The U.S.
validate that
10-year
spike.
2.075%, down about a basis point from where we were heading into the statement, and the dollar has continued on the softer side. A new high in the euro, 112.34.
Strength in the euro,
Gold prices have seen a marginal uptick to 13.52.
which means weakness in the dollar. As you hear this guy talk, hold on a second. Let's get rid of this guy. The bonds didn't validate that rally to 31.5, and I know it's still hovering around and close to the highs. I'm watching these bonds, and it's keeping me from getting excited to this upside. What was that market? Was that the DAX? Something skipped out of the corner of my eye first and led us up. Didn't help me catch anything, but I think it was the DAX. The only opportunity that I saw, you could have got aggressive to fade that pop, but was the break to 15 got cheap because the bonds rallied. But I went in and I foul tipped it, which means I didn't get it. I would have been nice. It was 18 and rallied right away to 23. And I clicked 3 handles up. All right, so here's what the bonds have done. After that S&P rally to 31.5, they come off to 25. Now the bonds decide to rally, which is helping us drive back up. Bonds went from 18 to 05, played around 22, 22, 22, 20, 22. They just popped to 29.30. Maybe help the S&Ps go to 25, 29. But it's a little bit after the fact. Should be buy stops above these 29 quarters. Take out 31 halves. Short's got to be a little nervous here, wouldn't you think? They weren't hawkish. They pretty much gave them what they wanted. I can't believe more shorts aren't there. They are. Shorts had to be a little nervous for a little bit of a move to this high. Bonds kind of helped lead this thing more or less from 25, but these 29s, the reason why they had this buy stop coming was because of this consolidation box. If you're looking at my chart, the breakout of that box. Where can we go upside? 35, 36, 35. There's some inventory. You see it on my heat map. So the Fed fund futures, though, is walking up a little bit. They'll probably start pricing in a bigger than 65% chance at the rate cut July. They dropped the patience language, which the market liked because they weren't sure about that. They said it will act appropriate to sustain expansion. That wasn't necessarily in some of the previews. So net, they liked it. The bonds stayed bullish or firm above where they started through the whole post 1 o'clock release. I make it all the same color, John. Maybe that's why. I get the heat map, all of it's the same color, and I change the minimum bid. But hold on a second. So this did have some follow through this consolidation box. But 35, if you did buy that down there, don't be a hog through 35. Could they go through it? Of course, but you could see them come off 35 for a reason. That inventory was there. There's another 500 that reloaded. 1,000 of them traded, and they reloaded for 500. So I'm not trying to get you guys short, but if you were long, you should have covered up there. Bonds haven't made higher highs, but they have firmed up. And are close. this one here, I'll tell you guys, this one I recognized and I just was late trying to buy it. I bid it and I was sitting down there. The train left the platform, but I seen it come down and get cheap, in my opinion, because the bonds didn't break. In fact, the bonds had skipped up. So this would have been a nice trade. Then this rally didn't have the bonds with it, right? They didn't have the bonds validated, go up with it. And so that's why it dragged sideways and then made a move down to 24. Now, what I didn't recognize and miss or seen it late was the bonds rallied to justify this to go to 28, 29. What was key is they had a quick consolidation chop and several rotations, 1, 2, 3, 4 rotations in this chop between 29.5 and 27.75. That's a lot of rotations for a semi-volatile trade, right? And that's where I had said there's buy stops and a breakout probably coming between or above 29.25. And the shorts had to be nervous in there. The only reason for the call to 35 was this heat map and the inventory up there. You don't have to get cute. You want to be simple. Are they, Dan? Keep an eye on the 10 years. He's got them leading the bonds. This is a pretty nice sell-off off that target. As soon as they got through this green NASDAQ, they stepped all over it. What was that, 06 even? So I'm looking at this. Let me show you guys something. See this low here and this high there? So that's this rally right there, correct? They've taken back 75% of it. What that tells me is it's going to be hard to shoot right back up unless they get a corollary that really runs. This came too deep. You get a lot of people who are looking to buy this rally on this pullback here where my cursor is, and they all got stuck, right? They all wrote it down and were like, oh man, why can't this thing rally? Why can't it rally? So they're all selling it here between 29 and 31. Not that it can't go through there, but I think it'll take some effort to get back through there based on the length of this pullback. So when you see that, Sam, here's a really good analysis. You see the gold spike, correct? Oh, wait a second. When you see that, and if you're bearish or you've got or something wants to get you short where the S&Ps were, use the word expensive. When gold spikes and you think the S&Ps have to go down, use the word expensive. And then get an ancillary to get your rear end in because it's a great call. They broke them from 35 to 26. You know what I mean? A 9-point break. You also had a rally, a nice little spike in the euro. So you had weakness. You had the dollar get hit, the euro spike, gold spike. Hey, right now they got a nice consolidation box. Buy stops above 29, sell stops roughly below 26.5. Same thing in the NASDAQ. Damn it. 76 and 82. Buy stops above, sell stops below. I just missed calling let alone trading it, but calling the 76 and the move below here. This was just a real quick box right there. and they tagged it. And if they get back through the middle of it, that's a nice little head fake, and could lead the S&Ps back through 29 even. The one thing I don't do is I respect my edge zones, even though chance that it rallies right in here, I won't buy it into a red. If you guys are looking at my NASDAQ chart where my cursor is. And I didn't buy this breakout through 29, which is right in here. Just all those rotations had to get taken out. I don't know. Everything seems to price in, giving the market what it wants. It got expensive to 35. Came back off. Like I said, the depth of this pullback is making it hard to go straight back up. This is a long down bar, up bar. Let's see if they could hold these 28.75s, Dan, and rotate it up. Bonds are showing you they're happy with the Fed's comments, right? When you say that? Hey, John M.A.L. Do you have Sierra? This market had a crappy head fake look, like it tried to rally through these 80s. This NASDAQ came right back through. Everybody in a position right now, and both ES and NASDAQ are looking at each other, ready to puke, both open longs and open shorts. I think the longs are in trouble especially through 2650. See the bottom here? Just watch this illustration. See the bottom of all these rotations? If they get through there, longs' eyes will look like grapefruits. That's where the fight is right now. 26.5 on the downside, roughly 30 even on the upside. Shorts are nervous above 30.50. Longs below 27. Yeah, I've recorded this. I'll send it back to you guys, along with the other two. We've had good attendance to these. The treasuries are staying firm enough for that dovish tone overall, right? And but it seems like the stock market doesn't want to re-rally. The stock indexes. They were strong macro before the statement. They were weak micro going into the statement. Net, they've rallied 17, 18 points from 22, essentially to 35. Now they're in the middle from where they started and where they rallied to, right? And they're all walking around looking for, there's going to be at least one more big move through 26.5 or above 30, right? And those are the two, we're right in the middle of the teeter-totter, so to speak. Hold on, John. I mean, I caught a little bit through 29 quarter, but those 18s that I missed that I seen, it was 18. The reason I say 18 is because I seen it at 15, 16. And I just went in to buy it. And I even missed the 18s. I do. Hold on a second. Careful short. I do have done a good job over the years tricking my mind. If you get really pissed on missing a great trade, you're going to do something stupid next. So you got to trick yourself and say, I caught that. You know what I mean? If you had everything lined up and you just were a little late, there was a good reason why you missed it. But you don't want to discredit the recognition just because you were a second late. And people do that. They get so mad they missed a trade, then their mind gets them to take another trade, which is ill-advised. And they wouldn't have taken the next trade had they not missed the first trade. What sense does that make, right? They're trying to push through these 30 halves, and they're doing a crappy job of it. Right here, we got some buying at 30 even. Right below here, longs are in trouble. Right below 29 quarter. You got to give it a few ticks below this green or above this red for the other side to get nervous because of the increased volatility. Now she comes in red. This is a nasty breakout to try to play, which means it sucks. See this bar right here or this bar right in here? Really? They should have just taken off and rallied and go up to 34 half and be done with it. They're going to do it without me on the team. Dollar's weak, bonds are strong, everything is, got from the Fed what they wanted. Weren't surprised, they weren't overdone. Rob, that's true and it's working. It's just that it's when there's so many rotations and resistance at 29.30, I always go opposite. Conventional wisdom is they see it 29.30s work as resistance. In opposite conventional wisdom is not going to work forever. That's why this breakout should have come. Like 29.30 is all resistance in there. So you're going to play it. You're better off playing it in this first yellow shade than in here. Even though it still might work, the more times a price works as support or resistance, the less likely it's going to. Press conference in 10 minutes could throw a monkey wrench into things. I think I'm going to do for our group a webinar like this or like yesterday for the trade, for all the trade talk ahead of the G20 meeting. This is a breakout that doesn't happen. You either get yourself chopped up or get the hell out. When you play breakouts, you're looking for momentum. So if you don't get momentum, then what the hell are you still in the trade for? The whole thing with breakouts, you need that son of a gun to go your way ASAP. You can't be sitting there holding there. Right now, the bonds, if we're going to trade same direction as treasuries, the bonds are making higher highs. NASDAQ, man, look at this resistance. It worked so well in there. And I'm actually surprised it works great in there after all these rotations. Your best bet is to sit and be patient here for the press conference to come. And I could pick up after this or during this press conference. Again, the only two spots were 15, 18 off the lows. You had to be super quick, maybe through 29 that first time. This time, this market couldn't go up, struggled to go up. You didn't have to be bearish. If you were, good for you, but you should have been less bullish when you've seen the struggle that it had to rally, 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 rally. So I'm not sitting here telling you, yeah, what's the matter with you? You should have been bearish and short for this break from 29 to 30. No, but you should have filed down any horns you might have had up here. $35 good target because there's just inventory that stuck out like a sore thumb, Tim. So it came off of that. 22s will probably be support. Why? Because that's ground zero. That's where we were right before this statement. It'll be temporary support. This press conference could throw a monkey wrench, see what he says. I'll keep this going through that, and we'll take it from there. So sit tight. If you don't hear me, I'm still on.
Have given back most of the post FOMC statement gains. The Dow up 28, the S&P up 3, the Nasdaq Composite up 2.5. Gold futures also off the post statement high 1354.70, touched a high of 1360. The dollar remains softer. We were weaker heading into the statement 112.34. The euro was up about 40 pips. Cable up about a big figure at 126.54.
Five half.
In terms of the Fed Fund futures and CME futures, we are seeing close to fully price in a rate cut at the July meeting heading into the statement. It was about 65% prior to the FOMC statement.
Five even.
Chair Powell will start his press conference shortly, generally summarizes the statement and gives his own perception of the current debate at the Fed.
You're listening to Trade the News.
7.5.
On the Q&A will likely be asked about his last statement where he talked about transient factors affecting inflation, also pressure on the Fed's independence from the White House.
The dollar yen at the lows of the day heading into the press conference.
While noting some significant changes made to the FOMC statement today.
All right, Powell's just started. This is bullish a little bit, but already bullish. Significant changes have been made to the statement today. He acknowledges that market liked it. So train around 25, 26 when he starts his press conference. 22 right before 1 and when the statement came out. He gives a press conference
Powell
and then he
saying so
opens
far
up the
this year the economy
questions.
has performed reasonably well.
Man, back up to these 29, 30s. Well, more like 30, 31.
Powell saying that they're mindful of underlying cross currents, including the trade situation, concerns about growth. Latest data from China and Europe were encouraging, says Powell.
Man, there was some leadership in the dollar.
Powell saying that in their
Didn't get
weeks
it, though.
since May, cross currents have
Leadership to the upside.
reemerged.
Dollar went down, euro went up, currents forex went up against the dollar on this move from 29 to 32. Damn.
Many Fed officials now see case for more accommodation has grown. Now,
Hey, this 33 at 35, there's some more inventory that was reloaded up there, if you remember. So that's why they're chopping right at it or underneath it. They pulled some of those 33 halves, 35 half or 35 even. Still got about 600 laying up there. I think they're going to go get it. They've liked what Powell's had to say.
Three even.
Longs could be, or shorts, I'm sorry, could be stuck a little bit above 33. She come in selling. You seen it go red,
markets
come away
rise
where my
again
cursor's.
after Powell noting that many participants saw a stronger case for more accommodation.
Above 33 quarter.
Saying that the GDP forecast remaining mostly unchanged masks details on growth composition.
Dow just led us 54 to 59. There's buy stops above 33 quarter, 33.75 if they can get there. They just shook me out. That little skip back down went from bullish to bearish in a hurry. I was trying to anticipate just a breakout through 33 and 34.
While noting many FOMC participants cited weaker business investment and the other cross currents as reasons for
one even.
Considering rate cuts and more accommodation.
Even quarter, even quarter, even quarter, even quarter, even quarter.
Even quarter, she tried to turn. She did sell those 30 quarters. She's getting her way 30 quarters. She steps on it right in here and releases it to the downside. Kept me from buying anything.
But not a rate that would put much pressure on inflation. Saying the Fed remains firmly committed to its symmetric 2% inflation target.
This is resistance until it's not, roughly around 30 even.
See rate cut as appropriate at this point, given their outlook.
Since those 29 quarters, I can't get my hands around this thing. I couldn't have anticipated this pop, but since it came, bulls are going to think they're back in charge. It's a lot to do with what he's saying. He's going back and forth.
I'll say uncertainties around the outlook have clearly risen since May. I'll say that they're looking to see if these uncertainties weigh on the outlook and will use their tools as appropriate. Starting the Q&A now.
All right, Q&A starts. I have the first question. See, this is where you get chopped up. You got to be careful. It's got to be something clear. Don't try to overanalyze.
Dodging a question about whether they considered a rate cut today. I'll say that they decided they wanted to see whether these risks would continue to weigh on the outlook.
That's where this heat map is good for you guys that aren't familiar with it. What is really helpful are targets for when the market, is maybe got a rally. If you're long, where do I get out? They provide good targets like they did up here. Then this inventory came in after the market broke. And then when it re-rallied, that's where there was some inventory up at 33 half. Went up there. Keeps you from being too greedy if you got money into a trade. Gives you some more real-time targets.
I'll say that they expect they'll be learning a lot more on these issues in the near term.
6 quarter.
While dodging a question about whether they decided whether they discuss cutting rates today or whether they might cut intra-meeting. while reiterating that they're prepared to use their tools as needed to sustain the expansion.
4 half. 4 even.
I just get the feeling I can't catch it short, but I just get the feeling this market's heavy on the stock side. They didn't get a surprise from the
I'll say news
Fed,
about trade has been an
so
important
they are
driver about
trouble going down,
sentiment.
but they're having seems like more trouble going up. I have to respect that it's still above 22, so I'm not going to validate that heavy type of opinion until we can get below where we started, because until
I'll
they
say
do
that they're not looking at any
this
one
market's
specific issue on setting policy
above where the hell
with
it
reference to
started.
trade.
All right, Rob. Good to have you.
Powell noting the recent weak jobs report and saying that bears watching, but it's only 1 month's data.
Yeah, well, you had some strength in the dollar. Let's look at the euro real quick. This is the euro, so this is going to be an opposite chart of what the dollar looks like, okay?
Powell asked
Because this is the euro versus the
about his
dollar.
term, saying that the law is clear. He has a
And you could see
4-year term, and he intends to serve it.
this
In response
this
to
is
the
all the way
report
back
that
to
the
1
White House
o'clock, right?
looked at the legality
right?
of demoting him from the chairmanship.
We're still above, the euro is still above where it started at 1 o'clock, which means the dollar is softer. So to your point, Sam, if we could rally the dollar, which means they slam this thing through these levels at 1 o'clock, that's some weakness for stocks. So the euro could influence stocks in the same direction because it's opposite the dollar. That 6E product, that is.
Saying that he doesn't
Hey,
think the
got
risk of waiting it too long
few
is a
swing lows.
prominent
Remember we
risk.
talked about where you are before or right on the number, which was around 22 half, if you remember, was right in here. And we dipped down, got cheap, rallied, took out buy stops above 24, took out buy stops above these 29s. But as we go through, you could see a few dips. This one to 24 swing low. This one to 24 swing low. Little swing low in there. We rally up to 33 half. They stopped them. They have another swing low around 24. I got news for you. They're not going to keep using 24s as support. They get through 24, they're going to blow the hell through 22 half. If they can get through 24, that can't continue to hold. You're going to get a lot of retail people seeing it hold 3 or 4 times saying, I'm going to buy it next time. Look how great it holds. And that's when it doesn't. As far as the NASDAQ is concerned, there could be some buy stops above these 72s, a few swing highs in there. But those 24s on the downside, you got to be careful being too bearish until when we get through there. Then you better be careful being bullish. Always keep your eyes and ears open. You should be following Trump on Twitter. If they reassert that they want to replace him, that's knee-jerk bearish for stocks.
Their process is careful and a thoughtful dissent is healthy.
I've got that heavy feeling, but I got to keep it in check till we're below 22, 24.
Statement today was quite broad.
6 3/4.
Hey, this is interesting. They
I'll ask
rally up
about
from 26 to 8
ECB's
3/4, then he comes
Draghi's
in buying.
comments earlier this week saying all central banks are
That's
focused on
near
their
term
domestic environment,
bearish.
own mandate.
28.75s. Man, they broke them to 27.50 real quick. Come back up to the scene of the crime. 28.75s. If you were listening to the male voice as 28.75, that means there was some quick edge zone buying, but yet it couldn't go up. And the other thing that's important is it's after it rallies from 26.25. So it rallies 3 points pretty much. And then buying comes in quick. You got to be kidding me. And that's usually a good indication of a win moment for what we just had. Now, if we can get these damn things to tickle those 24s, it's all over. Bond market's still staying pretty strong. The bonds were at 154.18. They're 155.08 with a high of 11. So they've stayed on their highs, through their highs, slowly making new highs the last 45 minutes. 27 evens has to hold as overhead resistance if the bears want to touch these 24s. If you guys, some people ask, here's the information on the trading room. Go to edgetradinggroup.com/trading room. I'll provide the link in here, but
5 3/4, 5 3/4, 5 3/4.
for those watching in the future,
5 3/4.
edgetradinggroup.com. I'd just come right out and ask him if I was sitting there. Do you feel any pressure from the president and you think he's going to fire you? And could you text me before he does?
While noting that the change of the dots suggests a more prolonged shortfall in inflation.
So this, see, you don't see it now, but in real time, when you see buying that comes in after a rally, it tags maybe the probability of a move lower. And where does it go? This yellow line is today's open, and the white line's a VWAP. No coincidence. It's trying to, or it doesn't just blast through there. As soon as it gets through this red at 25.75, releases to the upside. If they couldn't hold 27s as resistance, they did it right here. They can't. So then it gets back to chop. If you're bullish, don't be too bullish. If you're bearish, don't be too bearish. You could see these bars, these columns with numbers. You don't have to be super familiar with all the numbers. You just got to understand in any chart, there are up and down bars. That's what it's all about. If you don't understand that, then you're not being able to follow it. If you can't follow it, you're going to have a hell of a time trading it.
All acknowledging that dot plot does signal cuts ahead.
Yeah, but maybe they put pressure on them.
It's not
Dale
a
to quit.
forecast.
Hey,
It's not
moment of
discussed at the
truth,
meeting.
they're at 26 half, right? Some red selling. She's in a little bit of trouble, but some green buying. He's in a little bit of trouble at 6 half. And right in between them. Watch it. You got the open at 25.50, the VWAP at 25.25. You got some selling after it broke. You got buying before it rallied. My heavy feeling has got me on the short side, but I want to make sure it's not a filter, not subjective thought. Through this green, it got bearish. Almost got bullish again through this red. Still can. Got to get through this VWAP to scare and piss off other longs. If you're short, you want to piss off longs. If you're long, you want to piss off shorts. What does that best is getting below support or above resistance. That's obvious to everybody else.
all asked about whether they might consider a 50 basis point cut, act quicker, as they haven't really engaged with the question of what size a rate cut would be.
That could be dovish. They haven't really engaged in what size rate cut that should be. That could be near-term dovish bullish, and it was only to the tune of about 1.5 points. See if there's more. That answer, they haven't discussed about 50, which means they haven't said no to it either. 50 basis point is more than the 25s that are priced in. If they go, one time 50, the market initially would like that. And I think that's where that pop right now just came from. That got me to puke a short. And if I didn't, I would have lost on it. But here's what I want to tell you guys. If you're in a position and something happens with a correlation, something like in this case, he said something that was dovish and bullish, in my opinion. I didn't let being short make me say, well, let's hope that it's not dovish or bullish. That's what you often do when you have a position on. You try to defend that position
I'll
mentally.
ask about strong dollar.
And so you're not objective. If you weren't in a short position, you'd say, hey, that could be dovish and bullish, that comment. But now because you're in a short position, you're like, well, let's hope it's not dovish or bullish. Maybe it's not. It shouldn't be. Why would it be? And you start to stack up reasons why it's not. Therefore, your objectivity is lost. The reason for that pop and this little grind higher, my opinion, was not coincidental. It came with his answer about the fact that they haven't discussed a 50, which means that they haven't said, no, we're not going to do 50. Left the door open, in other words. All right, guys, I don't want to go on too long. If you're still listening to the press conference, know whether or not you're on delay. If it's on TV, you're on a little bit of delay. High definition, you're on even more of a delay. You got to know all those things. So you're going to see the market maybe move before you hear it. If you got a news source that's not as delayed, then
not much support for cutting rates at this meeting, saying that most members wanted to see more.
That's really not a surprise that there wasn't really a chance of cutting rates at this meeting.
We knew that at today's meeting. Most members wanted to see more before making that decision.
I have all these three. In case you're watching this video at some point in the future, we did it as part of a 2-day workshop. We did 3 events, order flow patterns, an overview on central banks, and then some live analysis of a Fed statement. I've recorded it. Give me time to render it, and I'll email it out to those that registered, or I'll email out that I posted it to YouTube. I don't know which way I'll go, but either way, you guys have access to them the next day or two. A lot of people have asked about it, but trade safe. Remember one thing, if you didn't learn anything from these 3 events, know where you're getting out before you get in. In other words, manage your risk before you take it and be as objective as possible. Know that you're not going to be objective when you're in a position. So do your best to be as objective as possible, to be understand you got this big filter, especially if you have an opinion like it's going to go down, it's going to go down, it's going to go down. It might, but it might not. Know that your opinion will start to persuade your objectivity to go congruent to what you're thinking. And a lot of people don't get that, and they get in a trade and they start turning skill to hope. They hope it goes up or down instead of the skill telling them, get out. You're short around 26.5. He said something that could be bullshit. Get out. You can get back in again. Who cares? It's always about missing trades. It makes you take a bad trade the next trade, or you're worried about missing something. You chase something. Missing is a big, big pain in this business that most people don't realize. You know why? Because it doesn't show up in your stats. You didn't take a trade, doesn't show up. Got to focus on what you missed. It makes you do some stupid things. We'll see you trading room guys tomorrow morning. Everybody else, thanks for coming. Hope you enjoyed it. Be safe.